So, ever since I posted my returns in the first video, a lot of people have been asking me to teach them my ways. I mean, I'm not an expert myself, but you can decide who's more credible. And yes, I'm having a bad month though. That's why we're starting this channel, so I can get some of my money back. Anyways, after checking the credibility of this John Angle... So yeah, I'll show a quick play I pulled off in the past few days to gain 20% despite the Tesla stock market crash. Before we get started, let me just get something straight. We're all here to make money. It doesn't matter if you advise going long or short, as long as you're making money and beating the S&P 500, you're doing well. I consider myself a Tesla bull, but I would swing trade from time to time because if we take a look at the stock chart, the price really didn't go anywhere in the past 5 years, and there are many reasons for that. Some because of Tesla itself, and some is due to the fact that the Wall Street and the big hedge fund guys want volatility. So yeah, on this channel, I've roasted quite a few analysts. Some Tesla lovers, some Tesla haters. Why? Either because they're losing money or they're not beating the market. Let's start with the Tesla bears I roasted. John Angle. Yeah, 12% loss when the S&P 500 gained about 14% year to date. That's a 26% difference between trusting John Angle and trusting the market. David Einhorn, hey, my retarded man. I like how CNBC still calls him a star when he lost 34% in 1 year. S&P 500 lost about 7% in 2018. And as you can see, the market is quite volatile. So for a hedge fund manager that buys and shorts, if he can capitalize on that volatility and still lost 27% more than S&P 500, then I'm sorry, you're useless. You would make more money if you just quit your job and become a janitor. At least there will be a net positive in cash flow. But wait, he's making a comeback now. He made 19% gain while the S&P 500 grew 14% year to date. Well, it's only a 5% difference, but I'll take it. So if you're stuck with him since 2018, you only lost 15% of all your money now, while the market gained about 7% since the beginning of 2018, up until today. Now, for the so-called Tesla bulls, Daniel Ives and Adam Jonas, you can just watch our last video for the roast. These are just people that don't stick with their convictions and changes their mind the moment the market shakes. A $10 worst case target? Shouldn't the worst case target be $0? What use is a $10 gonna do for investors? What kind of advice is this? Someone's probably paying him to say this. Looking at all the price cuts, it feels more like an orchestrated attack on Tesla to push the stock to the key support level. Yeah, none of them beat S&P 500. Can someone tell me why they're still employed? Their boss and clients might as well just put the money in S&P 500 and they'll still make more money. Alright, back to me. This is basically what I did in my USD TFSA account beginning from May 13th. Things were already not looking good, and it seemed like there is a perfect storm brewing against Tesla with the situation between US and China, so any other negative news on top of that could quickly escalate the situation. So I changed my investing mindset to swing trade. Originally, I only had 42 Tesla shares, so I sold that and bought Alibaba ahead of earnings. JD beat their earning and shot up 10% by the time the market opened, so I thought, hey, Alibaba being a much bigger empire and well-versed business should have a good earnings report too. I'm showing this transaction history because the order history doesn't go more than 7 days. Then I sold at 177 with Alibaba and came back to Tesla. And then I just began snowballing from there. The typical buy low, sell high, but with the order reversed. Quickly, my share grew from 42 to 43, then 45, 46, 48. And the last purchase I made was at 182.52 with 50 shares. And no, none of them are from me getting lucky, sniping during market hours, selling at a high point and praying that the price goes down from there. These are all strategic trades done right before and after the market opens. Because I know aftermarket and pre-market is when the short sellers and vulture-like hedge fund guys would try to manipulate the stock price to shake up investor confidence, since that's when the trading volume is usually a lot lower. So yeah, I take into account of that, sell before the market closes, and I wake up at 8 o'clock, see that wonderful 4% or even 7% dip, and try to find a time to buy in again. I know with the manipulation in the pre-market hours, some investors might be spooked and sell right away when the market opens. So the stock price will usually slide down further right when the market opens, but it will quickly bounce. So yeah, I wait for it to do the initial dip and then I buy right back. The last trade I made was on May 180 big support level. So yeah, here's how I started with 42 shares right before the whole thing and ended up with 50 shares at the 182.52 per share. And as of the time I'm writing the script, it's 9:40 a.m. So yeah, fuck, should have sold when I reached 197 during pre-market. But oh well, I'm happy enough with 50 shares in my bank account right now. Maybe I'll sell at 198.9 and buy back at 194.52 for some quick cash to reward myself a fancy lunch. Yeah. And if you want to know how I came up with those seemingly random numbers, I'll do a video on that. Because yeah, I will never set my limit at a whole number. Anyways, thanks for watching. Good luck on the stock market and see you on our next episode of Totally Legit Tribunal. Yes, we changed our name from EV Compass because there are all sorts of other topics I want to make videos on, but I guarantee it will be interesting.